And then we did get a little bit maybe bullish or over our skis, so we pulled back to a support level where you feel more comfortable.
That's right. I think most of the major indices have pulled back to what would be technically viewed by our technician Mark Newton as support. So the NASDAQ is on the support line. S&P did a 60% retrace of its recent rally, and small caps have held above their prior highs. These are all bullish support levels.
Tom Lee of Fundstrat Global Advisors predicts a bullish outlook following Nvidia's earnings, seeing it as a clearing event that could stabilize market. He highlighted that major indices have pulled back to key support levels, suggesting a solid foundation for growth. Lee is optimistic about small-cap stocks due to their discounted valuations, faster earnings growth, and minimal trade exposure, positioning them for strong performance. He also emphasized the pro-business environment, driven by deregulation, tax cuts, and improved market conditions, favoring sectors like financials, industrials, and cyclicals. While he acknowledged uncertainties in healthcare and rising inflation expectations, Lee believes the overall market outlook remains positive, supported by easing monetary policies and robust economic activity.
I want to talk another clearing event, Nvidia. You expect it to be a bullish clearing event?
I mean, most likely, I think markets get very hesitant in front of Nvidia's earnings.
Really?
And once that's behind us, we'll see demand is strong, and I think market breathes a sigh of relief.
Let's get to the markets here. Bring in Tom Lee here at Post 9, of course, Fundstrat Global Advisors, co-founder, managing partner, head of research. S&P target for year-end 6,300. Great to see you, Tom.
Great to see you.
You like to call them granny shots, easy plays. In your view, I have to imagine that list has gotten longer.
Yes. It is, but it stayed around 35 names, but just high quality names that are in the right sort of themes. We have 7 themes, and as long as they're in more than one theme, they become a granny shot.
Higher conviction on those names, I imagine.
Yes, higher conviction, and these are names that I think most people are going to be familiar with because they're large cap stocks.
There's some discussion about cyclicals today, that they make sense, and a lot of people are looking to 2016 for analogs, but some argue that there's not the commodity price support that you might have had in a prior cycle. You buy that?
You don't necessarily need commodity prices to help cyclicals.
Yeah, energy, but even materials to some degree. Some are.
Yes, that's right. Yes, so for those, I would say yes. I'd say the outlook for energy stocks isn't great, as good as people might expect under a Trump presidency, just because expanded drilling is lower oil prices. But for cyclicals like industrials and financials, this is, for all the things you guys were discussing, a great environment, including M&A and cost of money falling and animal spirits and deregulation.
Do you think there is real reflation risk in the next, say, 6 months?
That is something that we can see how markets are repricing, and there's a measure called 1-year inflation 1 year forward. So what does markets think 1-year inflation is a year from now? That has been creeping up. It's actually now at 3.6. It's been a trigger point in the past where the market starts to worry. So whether it's the deportation that's causing that, or fiscal spending, I'm not sure. But, it is, markets are starting to think about it.
Or more of just better growth outlook could help inflation expectations rise. I guess where Trump trade 1.0 ran into trouble was around trade policy. And once we see what he delivers there in terms of tariffs, something he's been very, very consistent on, do you think the market is looking past that, or everything else, the deregulation, the lower corporate taxes, is going to offset any weakness on trade?
I think that if someone was trying to paint a negative picture, that's the tariffs and the trade is what's on people's minds. But of course, that's the one where we don't know what the ultimate sort of policies will be. I'm sure markets will actually provide a lot of real-time feedback, and I think that's going to help shape what the policy is. So I think in general, we should expect a pro-business environment, one that's probably equity-friendly as well.
Where are we on fundamentals and just, in terms of this recent rally, in terms of multiples and your expectations on earnings as we head into next year?
Earnings season, I think actually, as we're wrapping up, is still been very solid. As you know, the drag on earnings has been energy and some of the commodity groups as well as healthcare. But, groups like industrials and tech are still producing good numbers. I think next year the outlook should be good because cost of money is coming down and we're seeing housing activity pick up. And if there's mergers, this is actually much better for small caps, and small cap earnings growth has been around 40%. So I think it's still sort of guides us to the same trades, which is we want to be more cyclical over the next 6 months, and then also look at things like small caps and Bitcoin.
Small caps, why? Emergence, just give me a little bit more on why small caps are going to be a bigger beneficiary.
Well, part of it is the backdrop. Small caps have underperformed for the last 5 years by really the largest margin in 25 years. They're now trading at 10 times median PE relative, and for the S&P that's almost 18 times, so a 7 PE discount. Small cap earnings growth is faster, and not only that, but roughly 44% of it is what I'd call very cyclical, and that's things like regional banks and industrials. That's a bigger weight than in the S&P. And then finally, there's a lot of cash on the sidelines, and I think if people are looking for breadth expansion, that's small caps.
Well, they also don't have the trade exposure. They get the benefit from lower taxes and regulation.
Yeah, that's a good
without
point.
the tariffs also, so it feels like they're in the sweet spot.
That's right, and the margin of outperformance could be sizable. I mean, they've underperformed by almost 100 percentage points, so I think you could recover that over the next few years.
We were mentioning Elon Musk a moment ago, and over the weekend, he endorsed this notion from Senator Lee about end the Fed, essentially. Journal over the weekend with the piece about Powell preparing or being ready to defend a removal if, in fact, he's asked to leave. Do you think the bond market would revolt at any kind of attempts to influence the Fed or re-executivize the Fed?
Yeah, I mean, absolutely. I mean, the Fed is the most powerful entity in the world, and part of it is its independence, and it's something that even the bond market is scared of. I think changing the structure of the central bank would be not good for capital markets.
I was wondering whether things were getting overdone when the Journal says a melt-up could be in the cards. And the Trump trade has already been going for a while. You think it's just getting started at this point? There's a lot probably for the markets to like, I guess, in terms of, I mean, he likes easy money, he likes low regulation, he likes lower taxes. I mean, there's a lot, it's more than a 2-week rally, maybe, in your view.
That's right. And I think maybe markets are course correcting because now with DOGE, the Department of Government Efficiency, there may be cuts to healthcare and industrials because of defense spending, so things that investors can focus on more deregulation of animal spirits, more like small caps and financials.
All right.
What about healthcare? You mentioned that in particular. I mean, it's not just DOGE that's going to be looking for more ways of efficiency. It's also changes afoot with RFK Jr. We're going to speak with Mark Bertolini about that in a minute, but how does the market kind of weigh that out?
Yeah, I think it's going to be a tough period for visibility for healthcare because, even recent comments about how much healthcare spending dominates advertising when you're not in the political cycle. And you're right, there's concerns about safety of certain vaccines and RFK being in charge of HHS. So I would just say there's clouds. There's still going to be opportunities probably in biotechs, but it's going to be challenging.
Just about the overall markets, Tom, and you think leading into Thanksgiving that slow sort of bleed, that slow bleed last week in the markets, you expect that not to be lasting, and multiple factors make you feel good about the next couple of weeks. And one of them, which plays into what we've been talking about all morning, is the Treasury Secretary announcement will remove some uncertainty. You're following Polymarket to see who's, and what Bessent was at 70, but then Musk tweeted about Lutnick and his chances went up. What is it now?
They've both fallen to sub 40%. So part of it is Kevin Warsh has moved up and Mark Rowan has moved up.
We're using Polymarket to decide who's going to be the Treasury Secretary.
Stranger things have happened, right?
So you think we hear this week? And that'll remove uncertainty, or that's not the most important thing?
Well, I think as we remove uncertainty, so it may not be announced in the next week or so, I think that's like what I'd consider a clearing event. It takes away some uncertainty, and the Trump trade, I think, is still intact.
The Fed might not cut as quickly as possible, but you still said we're in a good place, dovish-wise.
That's right. Last week, markets were a little taken by surprise when Fed Chair Powell said he might, slow things down for December. But if you look at December 2025, a year from now, the number of implied cuts is still the same. So I think he's dovish. He's just moving some of the timing.
Tom Lee of Fundstrat Global Advisors remains positive on the market, viewing Nvidia's earnings as a key event to stabilize investor sentiment. he highlights small-cap stocks as a standout opportunity due to their discounted valuations and minimal trade exposure. With key indices holding support, Lee believes growth sectors like financials, industrials, and cyclicals are well-positioned for gains. Despite uncertainties in healthcare and rising inflation expectations, Lee is confident that easing monetary policies and strong economic activity will support market performance. His insights encourage investors to focus on opportunities while staying mindful of potential risk. Do you believe small-cap stocks are poised for a strong recovery, as Tom Lee suggests? How might regulatory and economic shifts influence your investment decisions?